Hello and good weekend to you all. This is Doc Severson for the ReadySetCrypto OMNIA trade of the day for Sunday, the 30th of May. Once again, until this corrective pattern goes away, we're going to be focusing on the top two assets here, Bitcoin and Ethereum. Starting with the monthly chart, and I'm at the log chart, and certainly since we've had the price go from about 65,000 down to nearly 30,000, so we've had nearly 50% asset destruction from this. On a log chart, it puts things into perspective though. It just says, look, this is just a one monthly candle. On a major percentage basis, this is just a normal thing. Now that's to begin with. Now it could get worse from here. We don't know. And this is why we have to look at the analysis and understand the price levels that we're going to make decisions by. Now, when we move down to the weekly chart and just on the standard linear scale, we can see that, yes, indeed, we do have a weekly downtrend with a lower high, nasty piece of work here. But yet that weekly downtrend has not changed the polarity of the monthly chart. The monthly chart is still showing just a straight pullback. To understand the depth of the pullback, we go to the fib retracements and we go from the very beginning of the swing up to the very top of the swing. And you can see that the 61.8% retracement is holding right around the 30,000 level. So that's obviously very important. And as we go into the volume profile, we'll see how important that really is. Now, the weekly chart did go with a lot of energy here. So you can see this energy peak that we had up until a couple of weeks ago. And whenever we have an energy peak like this on the fractals, we can see that the price can go either up or down from there. Now, the obvious lean was to the upside because we had trend to the upside. But this shows once again that you just never know. This is why you've got to be very, very objective with your price levels and give yourself the option to say, what would I do if the price were to go up? What would I do if the price were to go down from here? That's the one thing that will separate you from the rest of the market, is that if you can avoid the groupthink, you will be objective and you'll be there to take advantage of opportunities as they arrive and not be biased into not seeing them when they're happening. This 61.8% retracement is obviously very important because typically we'll see bounces at 38.2, 50%, or as deep as 61.8, but rarely deeper than that do they recover. So in other words, we can see pullbacks to this level, and very often that they will just recover from there longer term. They build up the negativity to the point where it becomes excessive, and then short covering takes over and the price begins to rise again as the shorts all have to exit by buying their positions back and they get squeezed out. But if the price goes below the 61.8, rarely does it recover from there. Usually what happens is it fills in the triangle. And the triangle that I'm talking about is this triangle here, like that. So that would bring this all the way down to approximately somewhere around 10,000. Again, we're not here to predict whether or not that's going to happen. What we're here to do is to identify price levels that allow us to make decisions. All right, now we're down to the daily chart, and we can see that the daily chart has been consolidating now for several sessions, about 10 sessions since this really began with a high volume kicker there as it dropped below 45,000. So it's been consolidating. Now, what we have to understand is whether or not this consolidation and this subsequent large energy is going to lead to a break higher or whether it's going to go lower from here. So with that, let me talk to you about the two scenarios that we might see. Obviously, we're going to either see it go higher or lower from here. We don't know. What I would like to see is obviously the price go higher from here. That's what I'd like to see. However, what I'd really like to see is the price go lower from here. Let me explain. So let's pull this out. I'm just going to go to a price. We don't need that tool anymore. So now we've got a trend line that we can apply to this and, kind of put it along in that area. Okay. So this could be just another bear flag setting up and then heading for, typically a bear flag is about a halfway house in the middle of a trend. So the distance from here to here would be about equivalent to the distance from here to here. What I would really like to see is the price undercut this level and undercut 30,000, which is the former low, briefly. An undercut is a really powerful signal because a lot of times people will set their sell to open positions, right? This is like a sell stop, sell to open if the price goes under 30,000. It's almost like a, you're used to hearing stop losses. This is a stop entry for something like that. So they stop themselves into, this would be a sell stop position to open a position. So many times you'll see people entering as the price breaks below there with the intent of like, oh, I'm going to catch this huge ride down to here. And it often doesn't work out that way. In fact, double bottoms are best if they have a slight undercut like this, because this is where, again, you want to identify those periods of maximum negativity. And that is certainly one. If the price undercuts 30,000, you're going to hear all hell break loose. And this is the opportunity where we could see the price, where we could see institutional support jump in down here and begin the squeeze, because certainly you're going to have a lot of very weak hands, very weak short hands that are going to be entering new positions if the price breaks below 30,000. This can create a massive squeeze to the upside if that occurs. So nobody said that this was going to feel good, but many times the best opportunities in trading are the ones that feel absolutely the worst. Imagine going long as the price is down there at 28,000. Now, you can simply wait until the price breaks above 30,000, and it should do so with a lot of volume and a lot of velocity if it's going to do that. Otherwise, if the price breaks through 30,000 and just keeps on inching lower, what you'll find is that if you go down to something like an hourly chart, what you'll see, let's see if we can go back here and look at some of these moves here. But typically what you'll see is like during big distribution, you'll just see little bear flag after bear flag. You'll see the price break down, consolidate, break down, consolidate. So if the price breaks through 30,000 and is on its way much lower, this is what you'll see. And it's dreadful to watch. It's oppressive to watch, but think about it this way. There's plenty of opportunity on the way down, because normally once something breaks through like that and is on its way lower, you'll see flag after flag after flag. And this is why I'm talking about this opportunity here for the undercut. Let's go back to here. For the undercut under 30,000, you'll know it if you see it, because the price will briefly dip under 30,000, maybe down to 28,000, something like that, and then almost as quickly shoot higher from there. That's going to be the key towards that. Now, something else that we've talked about over the last couple of weeks has been volume profile. And volume profile is very, very important. You can see just in this area here how important this level is and this range is. There's plenty of volume that's transacted at this area. The scary thing, though, is that once we get under that area, there's literally nothing. There's no means of visible support until we get down to 20,000. This is where the next major level is. So this is why this area is fraught with opportunity and risk. Now, maybe that's just not going to happen. Maybe the price or the process of reversal has already started. For us to understand that, we're going to go down to the hourly chart. Okay, so here's the current hourly trend. And is it worth going to the 5 hour? Probably not. Let's go down to the hourly. So here's the hourly trend. And right now we're in an hourly downtrend with lower highs, lower lows. And right now this is just a little lower high. So on Sunday morning here in the Eastern US, we're seeing a little bit of a pop to the upside. So that's going from about 33.5 up to about 36 or so. So this is a 3,500 point range. And, there's plenty of opportunity to trade within there. But the probabilities are that this is going to be a lower high until one of two things happen. Either we're going to see the price continue higher to print a higher high, which is going to be above 38 or so. That would be one way to do it. Or the price will pull down again and form a higher low and then reverse. And then we'll have a 1 hour reversal process in place there, the change in polarity to an uptrend if that occurs. And that, as we talk about, rule number 2, reversals start from the inside out, they propagate higher. We'll see whether that propagates to the 5-hour chart, the daily chart, eventually the weekly chart, etc. So the bottom line here, guys, is there's lots of tools, there's lots of analysis to allow you to separate yourself from the crowd. The crowd is just going to be sitting there, wailing away on Twitter or Discord or, some subreddit in terms of what's going to happen in the future. And nobody knows what's going to happen in the future. Nobody knows what's going to happen in the next 5 minutes. All there is the opportunity to bias yourself into being blind as far as what the next move is. If you buy into somebody's postulation about what's going to happen in the future, you get what's called confirmation bias. You can't see the other direction. Your brain will literally filter out anything but the thesis that you want to believe. And this is why so many retail traders are like a deer in the headlights. They see the move in front of them, but they don't believe it. They can't believe it's happening because they just had not factored that in. So yes, the price could actually undercut this trend line and head down to 20,000. And I don't necessarily want to see that, but the price is what it is, right? Guys, it's going to do what it's going to do, and there's nothing that we can do to change that. All we can do is get on the right side of where price is moving to and find opportunity with that. Let's talk briefly about Ethereum. Ethereum has done some heavy lifting here because it's really has destroyed all of those gains since the breakout above 1,800 to 2,000. Okay, but it's holding that as support pretty well right now. You can see the volume profile is out there. Let's go to the daily chart. Let's see where the volume has been transacting. Obviously, there's a huge amount of support down in this area, starting at 1,800 and starting to increase from there. Now, there's no overhead resistance here at 3,000. So if the price is able to reverse, and you can see that reversal process would have to include a break above 2,900 for that to happen. Otherwise, this is just another bear flag as we talk about. And this is a halfway house on the way down to something that we don't really want to discuss at this point, which would be the price going all the way back down to 600. So like Bitcoin, the opportunity here is if the price undercuts 1,700. If the price undercuts 1,700 and then rebounds quickly above that, that could be the beginning of an epic short squeeze, just like Bitcoin, right? Undercuts on a double bottom are a very, very powerful pattern, but it takes nerves of steel to sit there and wait for the undercut and then look for something which may not happen, right? Because if the price undercuts, what if it just keeps on going? Well, you have to be ready to say, you know what, it's just going to continue to go lower and I may as well find a way to get on board. And like I talked about before, when something is really, really working to the downside, what you're going to see is just flag after flag after flag working to the downside. And sometimes these are very quick, just flag after flag, setting up, consolidating, and then breaking to the downside. So we're seeing a lot of assets today that are going green, like some coins, some assets are actually in pretty good shape here. This is Cardano is breaking nicely versus the US dollar. But a lot of these ones with the bigger numbers like Chainlink and things like that are ones that are coming from fairly, I hate to use the term oversold, but they've been punished quite badly. So this is where we're seeing them recover a little bit quicker because they're perceived as a better opportunity right now. However, they're still in a major downtrend. So I'd be cautious of just jumping on anything just because the price is low, because what is low can go lower. And so what I would do is I would fixate on just a few assets to specialize in, understand what the price levels will give you opportunity, and focus on those. We can also look at some of the altcoin. Since BTC is relatively soft right now, we're going to see some of these do quite well in the short term. Like some of these, like Hero, has done amazingly well in short term just because all the trading activity, and is looking really good right now. And this is partly because BTC has been soft, right? So when the denominator is soft or heading lower, you've got a better chance if that crypto asset is very, very strong. So some of these have got decent, I'm just going to sort of bounce through some of these, but some of these are stronger than others. Let's put it that way. But if there is going to be an opportunity for some of these altcoins, this is going to be the time if BTC is going to have a weak day. But again, they've got to be going counter to the rest of the entire crypto market for them to have a chance to go higher in accumulation. All right, folks, that is it for today's report. Remember, tomorrow is Memorial Day in the United States, and this is we're going to take that as a market holiday. And please remember why we take the day off. It's not just a holiday. There's a reason for the day off. So we are going to take that day off in remembrance for the fallen. Thank you very much for listening, and we'll see you back here on Tuesday. Take care.